Hello there, this is FairBinaryOptions.com and we are continuing our Binary Options Academy projects with one project that is having a lot of impact on trading. It is not visible. I mean, we cannot say that we are trading from a technical or a fundamental point of view, but it has more, if you want, to do with knowing yourself, with the perception and with setting realistic goals when trading. I'm talking about market psychology, and let me write here on the screen that we will use this opportunity with these two video recordings only to outline the most important things when it comes of market psychology perspective, so market psychology. Now, this is a very important thing to consider when trading, because trading is all about the human nature. We are talking about what you are being made of. Human nature, let's go and put it in here, is one of the most important things, human nature. This means that actually you and only you are responsible on your own action, for your own actions, and only you are responsible for the account, the trading account, to grow or not. Human nature is being the worst enemy of any trader, because it comes in with two different characteristics, either with greed or fear. What does it mean? What does it mean, greed? Well, let's say, for example, that this triangle, this Euro-US dollar, it looks to form like a triangle on this 4-hour chart. Let's assume that this triangle goes like this, from here to here. This would be the B2D trend line, and from here to here, this would be the A and C trend line, like this. In order for the triangle to break lower, it needs to break the B2D trend line, but then such a triangle comes with a measured move. The measured move is the thrust of the triangle and should be approximately this length by the moment. Let's assume that the triangle is completed in here. By the moment the triangle is completed, market goes and makes a move lower. This approximate should be the measured move. In other words, we have a take profit at something like 0.888 on a break low. So going short here and staying for the whole target, or buying a put option here and staying for the target. Now, in order to go short here and buying a put option here, you gotta have a stop loss, or a regular stop loss that would invalidate the whole trade, would be 13.20. So going short here, stop loss here, moving here. Now, assuming that market starts to move, so market goes and makes a move lower, and then basically you enter the trade in here. So we buy a put option with an expiration date. How to set the expiration date? It makes no sense to buy a put option here and to go with a 5-minute expiration date, or the 1-minute expiration date, or a couple of minutes, because you gotta correlate the expiration dates with the time frame. I'm talking about, this is a 4-hour chart, so you gotta have either end of day expiration date, or you may go even end of week. End of week doesn't mean that you wait for 1 week for the option to expire. End of week actually means that you are waiting. If you take the trade on a Thursday, you are waiting for one and a half days, or only one day. I'm talking about 24 hours. You gotta correlate it with the 4-hour chart. And let's assume that market goes and you take a trade, but we go with end of week, and this is on a Monday, okay? And then market goes and reverses just like that. So what do? Because human nature comes and give you a splash. For example, you might say, oh my god, I shouldn't have shorted it in here, and then, well, if the setup is still valid, let's go and take another short at this very moment. Because why? You are fearing of losing your money, or you are fearing that the option would expire, and you go short again here. But the triangle in the end, or market in the end, will turn up and goes like this. So what do you do in this situation? Fear, and you start to doubt your analysis and so on and so forth, and you will add another position and so on. And this one is being called overtrading. Overtrading leads to losses. Losses leads to faith being questioned into your capabilities, and of course leads to disappointment and so on and so forth. In order to avoid that, split the trades into one specific trade per a specific setup. So going short here like this, not here, not here, or buying a put option here, not here, not here, is the first thing to consider when trading, and staying for the target, not adding to a trade in order to avoid the fear element. How about the greed? Well, we'll find out this one on the second part. Stay tuned, please.